As of the most recent market close on July 31, 2026 at 4 p.m. Eastern Daylight Time, NUBURU Inc. traded on the OTC market under the ticker symbol BURU at $0.0555 per share, representing a gain of 38.75% or $0.0155 on the session. While a single-day surge of nearly 40% typically convinces casual retail traders on popular investing sites that a massive turnaround is taking off, the cold structural reality under the hood tells a far more treacherous story. Behind this sudden burst in volume sits a microcap industrial manufacturer fighting severe balance sheet dilution, persistent cash burn, and debt restructurings that continuously reshape share count. Most individual retail accounts scrolling through the Robinhood app see a microcap stock jumping on heavy volume and assume an insider buying surge or major commercial breakthrough must be occurring. The popular narrative suggests that NUBURU's specialized blue laser technology, designed for high-density metal welding and additive manufacturing, is finally converting into massive commercial orders. Investors using self-investing strategies often look at the sheer drop from historic highs and believe the stock is priced at a generational discount. Yet when you look past the initial headline, the reality reveals that recent price volatility is driven by capital restructuring attempts, penny stock trading dynamics, and massive share supply expansion rather than sudden organic earnings acceleration. The recent $38 million public offering structure, designed to extinguish $16.75 million in debt and support potential corporate acquisitions, highlights how much new equity is being injected into the market to keep operations going. When a company expands its share count to pay down immediate obligations, early holders routinely face extreme equity dilution. The daily trading metrics showcase intense volatility across retail platforms. On July 31, 2026, trading volume exceeded 9.9 million shares as the stock bounced from an intraday low of $0.0367 to a high of $0.064 before settling at $0.0555. For traders using Robinhood stock trading or active accounts on Interactive Brokers trading, these wide percentage swings create the illusion of rapid momentum. However, institutional activity in penny-grade securities trading below 10 cents remains exceedingly thin. Big institutional asset managers managing mutual funds or ETF portfolios through Fidelity Investments or Schwab Intelligent Portfolios rarely touch OTC equities with microcap market valuations due to liquidity rules and risk mandates. Consequently, the trading volume is largely driven by momentum traders, algorithmic market makers, and retail investors seeking short-term speculative swings. To evaluate whether this price action represents a sustainable rally or a transient rally, one must look closely at how microcap stocks operate across modern trading infrastructure. When an investor sets up an individual brokerage account through SoFi Invest or utilizes SoFi Active Investing, seeing low-priced stocks make huge intraday leaps often triggers fear of missing out. Yet order execution on platforms like Robinhood Cash Management or Interactive Brokers platform can experience slippage when trading low liquidity over-the-counter securities. High trading volume on low nominal stock prices frequently masks low total dollar volume, meaning a relatively small amount of capital can trigger massive percentage shifts in the share price. If you are following this company closely, comment below how many shares of NUBURU stock you currently hold in your portfolio and whether you believe their high-power blue laser technology can capture meaningful market share in industrial manufacturing. To evaluate NUBURU's long-term position, it helps to review what the company actually builds and where its core intellectual property lies. Headquartered in Denver, Colorado, NUBURU produces high-power, high-brightness blue laser systems. Traditional industrial lasers rely heavily on infrared wavelengths, which work well for heavy steel but struggle when welding highly reflective metals like copper and aluminum. Blue laser light is absorbed significantly better with non-ferrous metals, allowing for faster, cleaner, and defect-free welds. This technical capability positions the firm to target high-growth sectors like electric vehicle battery manufacturing, consumer electronics assembly, and defense applications such as counter-unmanned aerial systems. Earlier testing reports in defense applications, including laser dazzler tests for counter-drone security, showcased that the physics underlying blue laser systems is legitimate. The core engineering works, and the technical value proposition for welding copper batteries or target disruption is well supported by laboratory data. However, the gap between having superior blue laser physics and building a profitable, high-scale manufacturing enterprise is immense. Over past financial periods, revenue generation remained modest, while operating costs, research overhead, and corporate restructuring expenses consistently outpaced incoming cash flow. Financial statements over recent quarters revealed the scale of this operational headwind. Annual cash flow figures show continuous operating cash burn, requiring financing activities to supply fresh capital. While recent quarterly reports showed a modest uptick in top-line revenue from lower bases, net profit margins remained deeply negative. To survive ongoing cash drain, management has had to issue new shares, convert debt instruments into equity, and conduct public offerings. For long-term shareholders utilizing Fidelity Wealth Management or SoFi robo-advisor strategies, these equity issuances reduce the percentage of the company each existing share represents. Looking ahead, the future outlook for NUBURU depends on whether management can successfully transition from capital-raising survival mode to sustainable commercial execution. There are distinct potential scenarios that could unfold over coming quarters. In a bullish outcome, the company completes its debt settlement initiatives, stabilizes its capital structure, and secures multi-million-dollar purchase orders from Tier 1 automotive suppliers or defense contractors. Securing recurring defense contracts or integration into battery gigafactories would validate the commercial viability of blue lasers and establish a path towards positive operational cash flow. Conversely, in a bearish scenario, commercial adoption remains slow, customer acquisition cycles drag out, and the company exhausts its cash reserves once again. If operational revenue fails to cover ongoing overhead, management would be forced to seek additional dilutive financing or debt restructuring, putting renewed downward pressure on the stock price. Furthermore, operating on OTC markets creates additional regulatory hurdles and limits accessibility for mainstream institutional capital compared to major exchanges like Nasdaq or the NYSE. Investors utilizing self-investing tools across various investing sites must carefully balance the risk profile of micro-cap technology developers against established technology leaders. While mega-cap equities like Tesla stock, Apple stock, or Nvidia stock draw the vast majority of retail and institutional attention due to their massive earnings power and deep balance sheets, penny stocks operating in industrial niches carry fundamentally different mechanics. Wealth management strategies built around an intelligent portfolio or automated options like Schwab Intelligent Portfolios typically cap exposure to high-risk microcap equities at negligible levels for a reason. When you weigh expectation against reality for NUBURU, the picture becomes sharp and clear. The prevailing market expectation often focuses on the potential for massive percentage gains driven by technical blue laser innovation, low stock prices, and sudden trading surges. The underlying reality, however, is that NUBURU remains an early-stage industrial player working through severe balance sheet dilution, debt settlement challenges, and high execution risks. While the fundamental physics of blue light welding provides real industrial utility, turning that technology into sustainable shareholder value requires consistent commercial contract wins, tight expense control, and operational scale. Anyone evaluating this stock through their individual brokerage account must look past short-term price spikes and focus on whether the company can establish long-term financial independence. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any financial investment decisions. Invest responsibly. Don't forget to like, comment, and share this video to support the channel.